Well, welcome everyone to our Wisconsin Agricultural Export Advisory Council webinar. It's an informational webinar only and no official business will be discussed. We have a great topic today. It's titled Growing Exports and Ensuring Payments Through Credit Terms and Insurance. We have three dynamic speakers who will be addressing this topic about credit and risk and securing your export sales. And this is going to be a wonderful program today, and I'm happy to bring it to you. I'd like to turn it over to Secretary Randy Romansky to make some welcoming remarks.
Thanks, Lisa. Thanks for kicking us off. Good morning, everybody. Thanks for being here. It's a little bit warmer on the Zoom call than it is probably outside right now. So these webinars continue to be an important way for WAXI members to connect about pressing topics, and for DACAP and WEDC, Wisconsin Economic Development Corporation, to hear what's valuable for all of you. See, we have a large group today. That's great to see. I don't know if she knows I'm going to do it or not, but ahead of today's webinar, I just wanted to give a thank you to Lisa Stout, who has worked to further the benefit of the Department of Ag, Trade, and Consumer Protection for our international trade opportunities, and for the Wisconsin Ag Export Committee Council. Sorry. So she's been a great contact for you, and she's been a tremendous value for the state of Wisconsin, try to help grow our economy by promoting Wisconsin products abroad. So she's retiring after more than 2 decades in state service. So thank you, Lisa. A round of applause for you.
Thank you. Thank you.
Yeah. And Lisa already mentioned it. This morning's presenters are very dynamic, and they're going to discuss discuss growing exports and how to secure or ensure payments through credit terms and insurance. So we're lucky to have them with us. I'm going to mention them in order, and I believe this is the order they will go in. Mark, you can cue me otherwise. But with us today is Marielle Husanga, who's standing in for Ursula Wagrenowicz from Export-Import Bank at the U.S. We also have Bruce Glob with Trade Acceptance Group, and somebody who is no stranger to the world of DATCAP, Jen Pino Gallagher with M3. So thanks again for joining us today. We'll look forward to the information that our guests are going to be providing us, and hope for the lively discussion that happens as part of today's meeting. So off we go. Back in your hands, Mark.
And actually to Lisa, who will speak to the speakers.
Well, do you want to, Mark, did you want to set them up?
Sure, I absolutely can do that. So the topic this morning, and Chad Benson had brought this to us, and through some of the folks in the state, and it's maybe a different detail than what we've covered in previous webinars, but I think it's important because the cost of capital is so high in foreign markets for a lot of our customers. Being able to offer open terms, 60, 90, 120 or longer day terms, and using mechanisms to be able to do that actually is more effective often than providing a deep discount on your price. So you retain margin and still grow your sales. And our competitor countries oftentimes have similar offerings than what we're discussing today with our speakers. And so oftentimes your competitors from overseas are utilizing these tools. And if you're not, and requiring cash in advance from your customers, then you could be putting yourself at a disadvantage and limiting your sales growth in several markets. And so this morning, the three speakers from EXIM, from Trade Acceptance Group, from M3 Insurance can talk about how you do that, what programs are available, or what resources are available, and to make sure that in offering terms, you also get paid. Worked for a boss early on in my career, the CEO of the company, who said, Mark, it's not a sale until it's paid. And so obviously you want to grow sales, but you also want to get the money in the bank from them. So with that, I think we should start with our first speaker from the EXIM Bank, Marielle Wasanga.
All right. Share my screen. All right, can you see my screen correctly? Set in full
Yes.
presentation mode? Okay. All right, so good morning, everybody. And thank you, Mark and Lisa, for having me today. I'm Mariel Wasanga. I'm Regional Director for the Export Import Bank of the United States, part of Central Region team. So probably know Ursula very well. She is our Deputy Managing Director. Fortunately, she had a schedule conflict, so she sent me in for the fight. So we're going to talk today about what solutions we have here at Exim to support agricultural exports. So first of all, quick introduction to who we are in case some of you are not aware. So we are a U.S. federal government agency, just like Department of Commerce and Department of State. We're much smaller though. We were established back in 1934, so this is actually our 90th birthday coming up in February. So our headquarters are in DC. We have 12 regional offices nationwide. We cover all the U.S. and U.S. territories. We're open for business in over 180 countries. There are certain countries where we cannot do business with, and we'll talk about this a little bit later. But we're open for most of them. Our mission, as per Congress mandate, is to facilitate U.S. jobs by supporting the growth of export of American goods. So we're here to fill the gap and complement private sector financing. We do not directly compete with them. And we're also here to level the playing field for U.S. companies that are competing for global sales. So these are three key ways that we can help you while you either are starting or are all the way to your export journey. So we can help you improve competitiveness by ensuring your receivables from international sales. So we'll make sure basically that no matter what you get paid, especially when you are selling under open account terms of credit. We can also assist in obtaining pre-export working capital financing, and we can support the capital equipment export, providing term loans for your international buyers. So we'll expand a little bit more on this as we continue with the presentation. This is how we can make a difference if we're working with your company. Like I said, we level the playing field so you can compete better and win sales. There are multiple other Exim banks in large developed economies. China has 2 Exim banks. Saudi Arabia has an Exim bank, India. So in the end, these export credit agencies are backing up the transactions that their companies are doing to foreign buyers, right? So believe me, if you are not open to providing some type of credit to your foreign buyers, there's definitely a foreign competitor that will be willing to do that. And it's because they're being supported by their country's Exim bank. So we can help you minimize the risk of buyer non-payment, which is probably the most pressing concern that you have whenever you're evaluating how if you're going to keep them terms or just going to request your buyer to pay you 100% upfront. And we can also supplement commercial financing in a way that's beneficial for your company, whether you are looking for an international trade loan or whether you're looking for working capital, or even if you're not necessarily looking for a loan for your export, but even if you just want to expand your borrowing base with your domestic commercial lender for your everyday activities, we can help with that because the way it works is that multiple lenders are risk averse. So they will typically won't consider your foreign receivables as part of your borrowing base unless they are insured, just because of the risk. So this is a way we can help in that area as well. One big important note about working with us is that we do not have a minimum and maximum transaction amount. So there's no company or transaction that is too small for us. We have supported sales of a few $1,000s. I just had a company insure an invoice in US. I believe it's $5,000. So, there's no, we calculate the premium rates based on the transaction amount, and most of the policies pay as you go. So we really try to make it easier on you that you can get this coverage so you can go out there and win more sales as well. So here's a quick snapshot of how we support agricultural exports. So out of all our ag exports that we have supported in the last 5 years, 80% are associated with small businesses. Particularly my division focuses on small business. So we really have a strong support system for to take care of those companies that are defined as small business under SBA standards, whether that's less than 500 employees, or it could be even more depending on your net scope. So we can support the exports of agricultural commodities and consumables, new and used agricultural equipment, livestock, foodstuff, chemicals, supplies, and services. Right. So the variety of equipment benefiting from excellent support has ranged from smaller items such as discs, arrows, to more complex machinery such as seeders and combines. So we can support any type of, literally any type of ag product. So beyond the sale of equipment and commodities, we have also assisted U.S. exporters to supply with financing for ag projects. So, for example, we have supported the export of greenhouses for individual growers to the development of large-scale integrated meat processing facility supply. So you can understand the wide range of projects and goods and services that we can help to help you. So we're going to focus today on the key topic that is the reason of this webinar, which is selling to foreign buyers on credit terms and how you can get protected against non-payment. So here in this graphic, you can see sales terms as a spectrum of risk. So most sellers, especially small businesses that are engaged in the export, are extremely risk averse. So whenever they're starting out, even throughout the whole export journey, they will only accept 100% cash in advance, or at least the majority of the invoice must be prepaid in order for them to show, which is definitely the safest mode. And if you can get a deal like that, then I'm not going to sell you otherwise, right? That's definitely the most secure payment method that you can take. However, if you see it on the buyer's perspective, that's extremely high risk for them. So sometimes you need to a little bit put yourself into the shoe. Just when you import parts or components or raw materials from abroad, sometimes you are a little bit concerned about paying 100% upfront to that foreign seller because you don't know if the quality is going to be good, if they're even going to send the items, right? So it's a similar perspective when you're dealing with your international buyer. So being extremely strict on only accepting cash in advance can definitely be detrimental in your chances of winning more sales or even a large contract. Just because, it's high risk on the buyer, right? So for those type of situations, you start thinking, okay, so how am I going to get protected in a way that I can provide some more flexible terms to my foreign buyer so I can win the sale? So then you start thinking about letters of credit and cash against documents. Very useful tool, very safe as well. But, there's a level of complexity in those financial tools. And especially if you're exporting low value invoice, let's say 1,000, even 10,000, you might not even want to go through the whole process of giving a letter of credit on it, or even getting a bank to take a letter of credit on it. So in the end, while these are very good instruments, they might not be suitable to all the transactions, especially the low value ones. So then you start thinking about open account terms, and that's definitely as is means it's a very high risk payment method for you because you're giving them credit, right? 30 days, 60 days, 120 days to pay. And there's no guarantee on that. So you're probably a lot of risk in case there's an issue, whether that's commercial or political, that prevents your buyer from paying you. And that is when Exim steps in. So we allow you to offer extremely flexible payment methods in terms of open account terms, but we offset the high risk that it means for you to offer those credit terms by protecting your foreign receivables. So this product is called export credit insurance. So this is an insurance policy, right? In this case, we'll cover receivables generated from the exports. We'll protect you against non-payment by international buyers. We cover the risk of non-payment when it's due to commercial or political issues, and we'll discuss that in the next slide. So the export credit insurance product will enable you to be more competitive by offering credit open account credit terms, and you will also be able to use this insured foreign receivables as collateral to obtain working capital from your lender. This is something that ties to what I was discussing in the beginning of the presentation. So 3 key benefits. It's a sales tool. Will enable to if you are more flexible, your buyer is definitely going to put you as the top of the list compared to others that are going to be requiring less flexible terms, or 100% in advance. We offer risk protection, and also it's a financing tool that you can use to expand your borrower base. So this is how export credit insurance works in a nutshell. So you identify a foreign buyer that is interested in selling to you. You discuss in buying from you. So you discuss some initial terms for the transaction. You offer the credit terms, either that's 30, 60 days. So we typically recommend that you consider how long it's going to take for the goods to reach their port, and then just give them some extra days, right? Remember, you got to take into account all that period from the moment that it leaves your door to the moment that it gets to your foreign buyer's doors, right? So that's the moment when you come to us and we discuss about policy options. We'll get that transaction covered. Your buyer accepts deal terms. You ship your product and invoice the buyer. And then you come to us to report shipments and pay premiums on the amount shipped. So most of our insurance products are pay as you go. So you don't pay anything until you report that you've made a shipment. So we have clients that they have a policy for several buyers, and sometimes they don't have a lot of activity. So there are months that they report 0 exports, and that's fine. Obviously, we want to give some action to that to this policy, right? We want them to be moving. So, but it's still okay. There's no cost to maintain the policy. So that's something that's it's very beneficial. So the buyer pays, and that's good. But if the buyer fails to pay, then you can come to us, file a claim, and we'll get you covered anywhere from 95 to 98%. And I'll discuss about the 98% coverage, and that's definitely specific for ag goods. So eligibility to work with us, we welcome all industry. We do have certain exclusion, and that's military and defense exports. We may have certain exceptions if it's a dual use item, it can be used for military and commercial use, but it gets a little bit complicated about it. So we want the client, the exporter, to have at least 3 years operating history and a positive net worth. We can make certain exceptions on a case by case basis, especially we're working with a very small business. We do require that the products are shipped or the services are provided from the US with at least 51% US content, including labor and overhead, but not markup. So we can support the export to most markets. Like I mentioned, we're opening about 180 plus markets. However, there's some export destination that we're not open for business. And that is outlined in our country limitation schedule. And I provided a link there. It's a very dynamic tool that you can use to see, where we're open. Or if we can partially open in a certain country depending on the type of transaction. So this is a great tool to use to see if we can cover. And if we cannot cover a transaction in a certain country, there's typically a big reason, just because we do not have sufficient assurance of repayment, right? So for example, we're not open right now in Argentina, and that's because they have a big issue in getting US dollars. So they cannot get currency exchange, and that basically means that it's extremely possible that they will not be able to pay you. Similar to Ethiopia and Congo and similar countries. So we need to evaluate that before considering move forward with the transaction. And aside from that, we'll just need to have a DUNS number, an active SAM.gov registration, and you need to have a unique entity identifier also to put together information. So here is an outline of what we can cover. So like I mentioned, we protect against non-payment, but obviously there are certain limitations, right? We can also only cover commercial and political risk. Commercial risk being insolvency, meaning your buyer cannot pay just because they have some issues with their accounts receivables, or just some cash flow issues. For any reason like that, they're just not able to pay. They file for bankruptcy, or there's a projected default, right? A political risk could be that there's a war, a revolution, or insurrection in the buyer's country. There's the currency transfer risk, which is happening, what's happening in Argentina. Or there's a cancellation of import or export license for the buyer due to a government law that passed or similar, right? So the only thing we cannot cover is a commercial dispute. So make sure that you properly document your transaction and have everything in place so your buyer cannot pass their default due to a commercial issue, right? So this is very important because we will not be able to honor a claim if it's because there's some discrepancy in that area. So I'm going to elaborate a little bit more on our short-term export credit insurance product. So this is like I said, it's a policy that covers your foreign receivables. Most of our transactions will be up to 180 days. Certain cases, like for example, with both agricultural commodities, it could be up to 360. But it will depend on the transaction and how many days of credit you will provide to your buyer. So we have two large categories or our export policies that we have under short-term export credit insurance. First one is a multi-buyer policy, and we have some products under that multi-buyer umbrella. But basically, in a nutshell, this multi-buyer policy offers options to cover all or part of your export portfolio. Our coverage goes to 95% of the value of your invoice. And we also have a single buyer in case you only want to cover one buyer for a predetermined period and dollar amount. And in that case, just because of risk spread, coverage is only 90%. However, we do have, we can offer larger coverage of 98%. And high returns of up to 360 days for both agricultural commodities for all our policy types, whether it's a multi-buyer policy or a single buyer. So that's the big advantage, because we understand that there's a higher percentage of there's reduced profit margins with ag commodities. So there's a higher percentage of companies that sometimes, if you add the cost of insurance, that might not really be something that might work financially wise for them. So we try to be more flexible and to be able to work with this type of companies. So how can we assist you? Like I mentioned, export insurance to help you in terms of extending credit and getting protection against non-payment. Also helps you in regards of access to capital and expansion of your borrowing base. We also have additional products that may be of your interest, and you may discuss that with us in more detail if you're interested. But one of them is our working capital loan guarantee. This is a 90% loan backing guarantee that we provide to your lender or to an EXIM lender, so you can get a working capital loan to fulfill export orders. So it can be set as a transaction specific, or it can be a revolving line of credit. There's no minimum or maximum amount. The idea is that your lender's willingness to provide funding for export working capital for you is increased because there would be EXIM supporting and guaranteeing that transaction. So in case there's an issue with you and you default on that loan, they have the guarantee of repayment from us. We also offer foreign buyer financing. So in the case that you come across a foreign buyer that wants to purchase a pretty large dollar amount of goods, or even they're working on a project that they need a large quantity from you, and they might not be able to secure the financing needed to make that purchase from their own lenders in their foreign country, then also that's an opportunity for us to help you. We can facilitate that financing to your foreign buyer so they can purchase from you, and that is done through a U.S. lender who's receiving a guarantee from us, so they can make that loan happen, and that transaction happen as well. So we provide medium and long-term loan guarantees to be able to support that type of transaction. Finally, this is our newest initiative. It's called Make More in America. This is a domestic financing for capital projects that was just launched last year. Actually, we had two big transactions that we just approved for Make More in America. So this initiative was created to support U.S. manufacturing and the creation of U.S. jobs here in this country. So if you're considering expanding your facility, building a brand new facility, any type of capital project that will have a strong impact in your operations and in also in the exports, and that's something that we do require, that at least 15 to 25% of the goods being generated or services being created in that new facility, or because of the loan, is export related, right? So the idea here is that we want to support more U.S. jobs. So if you're interested in that, there's definitely something to discuss. Our loans are directly coming from EXIM compared to our other products. This is not a loan guarantee. We actually provide the funding directly. Our sweetest spot is anywhere from 5 million plus, just because the small business administration has loans like 5 or 4 that can support this type of project for up to 5 million, right? So in order to to not compete with them, we have set that amount. We have some prioritized sectors like small businesses of any kind, clean technologies, and what we call transformational experts. But we are open to all sectors, all industries, all type of projects. So finally, I'm going to present to you a little success story in a Wisconsin company that has used our products and to expand to international markets. Probably you know this company very well known. They're a cheese manufacturer, fourth generation family owned. They specialize in making and selling cheese and to domestic and multiple international retailers, restaurants, and food providers. So this is a small business. And there is via standards. They export to several countries in Europe, Canada, Mexico, Australia, China. They use our export credit insurance since 2019. So we went from just helping them with one-off transaction to securing most of the international sales portfolio. So with our assistance, this company has been able to offer open account terms to their foreign buyers and increase their market share in markets that were really competitive. They've expanded into new markets like Israel, France, Guatemala, China, and Australia. And because of our systems, they have been able to double their exports in policy period to 2022 to 2023. So that's a pretty strong performance export-wise. So this concludes my presentation. I hope I was able to give you a high-level overview of what we do and get you to be interested in discussing more. And obviously, at least give you some, help you understand how the global market works. And if you are only accepting 100% cash flow advance, maybe, make you think about the possibility of offering open accounts, open up account terms. So, knowing that the Exim Bank can assist. So any questions?
Thank you, Marielle. I do want to mention before someone hops in, she will have to hop off pretty soon. So this is now your chance to ask some questions.
And this is Ursula's information. She's your main point of contact in Wisconsin. So please feel free to take her email or phone number, and I believe we'll be sharing the slide deck as well. So you have that resource.
Anyone want to ask a question? Make a comment about using their services?
Yeah, I have a question. This is Ryan Wooker. Can you explain if there is a claim, what that process is and how detailed and what's needed generally?
So generally, we will require that you come to us with a purchase order, commercial invoice, and a bill of lading. Those are 3 key documents. So for those that they only ship exports, be careful, because there are multiple cases in which that has backfired because, and that, when you use exports, you typically do not have anything to do with export transaction, right? You have your foreign buyer coordinate all that process. So most of the time, especially smaller businesses, do not keep even a copy of the bill of lading, right? So if there is an issue and they come to us for a claim, we will ask that because that's a proof of the goods were shipped, right? So that will be, a reason for denial of claim. So make sure you have those 3 documents. Also your PO, mathematical commercial invoice. And aside from those 3 key documents, we'll ask you to make at least 1 collection of them. And that could be in the form of email, letter, phone. Hopefully, just for the sake of keeping track and records, an email would be the best option. We just ask you to do 1. You can do as many as you would like to, but we'll require that you present 1 whenever you come to us for a claim. Now, claim period is very important. So when can you come to us to file a claim? Typically, it's going to be a 90-day period from the moment that they are past due. So consider that whenever you are doing some calculation of your cash flow, etc. Because it's not that as soon as they're past due, you can come to us. You're gonna wait 90 days. There are some exceptions to that rule, and that is, for example, if your buyer filed for bankruptcy, then there's nothing that can happen there. There's no way they're going to pay you. So in those type of cases, you can come to us before the 90-day period and file the claim. But in most situations, you gotta wait those 90 days, just because we want to make sure that we give the foreign buyers some time to to get some accounts receivables paid, and if they're having any type of cash flow issue, we solve that. Just so they're, because otherwise, if they get reported, if you file a claim against them, they literally get reported to other Exim banks, and their credit can go downhill. So it's not what we want, but that's why we give them some grace. And it's also important to note that you can use it also as a way to collect payments even before the 90 days. Most of the time, we've seen cases in which the exporter goes to the foreign buyer and says, hey, you're past due. By the way, you need to prioritize the payment on this invoice because it is insured by the U.S. federal government. So in case you don't pay me ASAP, I'm going to file a claim and report you. So it's better that you get that taken care of as soon as possible. Most often, they do end up paying real fast when they hear that. So that's a way as well to collect faster.
Thank you. Thank you very much. Any other questions?
If I could add, Marielle, I think that there are a number of companies in Wisconsin that sell, as you described, Ex Works, or they say, listen, I deliver it to my customer and they take care of everything after that. So that's obviously the easiest side on the seller side, but oftentimes we're still, that company is still the exporter of record. So as you mentioned, that bill of lading, it's not the bill of lading that gets the goods to the port or wherever that customer's destination is that they're going to ship. It's the ocean bill of lading. Is that what you're talking about?
Yeah. The ocean, it's bill of lading, ocean bill of lading. Yeah. I mean, airway bill is for air transportation, bill of lading for ocean transportation.
Sure. So
basically
sometimes
the proof that the goods were shipped.
Excellent. Thanks for that. And there is a comment from Larry Krieger. And I don't know, Larry, if you want to open up the mic and maybe mention a bit about your experience using XM.
So
maybe he's...
Yeah. So in general terms, just so I can give you a little bit more background on our export insurance, I think Ruth might be also be able to tap on this later. But many exporters that don't know about us, they sometimes think of our export credit insurance being at the same level as other type of insurance, and most of the time that's extremely expensive, right? So and it's important to know that it's actually pretty cheap. I mean, the cost of getting a receivable insured is really marginal. Anywhere from 0.5 to 1.5%, can be a little bit over that or lower than the 0.5% of the value of the invoice, depending on the country risk and the type of policy you have. But it's really, really that cheap, especially for the protection that you get. Now, you can include those premiums as part of your invoice. In any way, you're providing free financing to your foreign buyers. So, it should be a cost that can be that can be passed to them, right? You don't have to really, absorb it within your own profitability. So that's a way, pass the cost to your clients. Also, in several states, there's a step grant, also in Wisconsin, that can help you offset up to a percentage the cost of our insurance. So use those resources as well. And two key things: most of our policies have no deductible, and it's pay as you go. Like I said, you ship, pay your premium, ship, pay your premium. We do not ask you for any type of monthly fee that you have to pay. And also, when you work with a broker, and for excellent trained brokers like Tag, you don't have to pay the fees. We pay the fees, so it's a very good deal for you. So there's no reason why you're not protecting your foreign invoices, and there's no reason why you're not providing some flexibility in your terms. You don't necessarily have to offer 100% open account terms. You can just start, 50%, 60% advance and then the rest in 30 days or in 60 days. And you'll see the effect that will get into your buyer. You get more orders, you get larger orders, and it's a win-win. Because for us, it's not about selling you insurance. We're a federal agency. We're not here. We don't have the mission to sell more insurance policies to you guys. Our mission is to support U.S. jobs. So that's the way we do it. We make sure that you're more competitive. We make sure that you make larger sales, so you get more money to hire more people, and that makes the economy grow.
Very good. Thank you, Marielle. And the comment from Larry was that they currently use EXIM to ensure their export receivables. And he also adds that you are very good to work with. So it's another testimonial in addition to the Sartori group that also is using the services. So if there aren't any more questions for Marielle, and Marielle, you're certainly welcome to stay on as long as you're able to. I know you have another meeting that you're committed to here fairly soon this morning, but appreciate the information that you provided. And again, for all of us, these are recorded, but we also make available the presentations. So we'll have those presentations for each one of the speakers this morning. We'll make those available to folks to download from our website. So if nothing else for that, then we'll move to Bruce Glaub with Trade Acceptance Group. So talking about government program from EXIM, longstanding program, but there's also solutions that are available from the private sector, and Bruce will talk about what those are and when you might use someone like themselves for that service. And I'm looking to make you, Bruce, a co-host, which you are now the co-host of the meeting, so you can share your presentation.
Thanks, Mark. Okay. And I assume everyone can see. Mark, is it good?
Yep, looking good.
Okay, great, thank you. I'll set a little timer here because I know we're a little bit time strapped, but we definitely wanted to make sure that for those who are just getting started, that they really knew a lot about EXIM Bank. Its benefits were, full disclosure, platinum broker with EXIM. We've been working with EXIM for almost 30 years. We very strongly feel it's the place to start, but EXIM does not want to compete with the private sector. So they like to get you to a point where then you can graduate from EXIM, maybe get an even lower rate in the private sector. But you really need to kind of sharpen your skills, your policies, procedures, with Exim because the Exim is a little more, you can petition claim filing. They're a little more, they're less rigid than private. Private, obviously, as you would think, they're for profit, so you don't have the appropriate documentation. You're not going to get your claim paid. So that stated, let's kind of move on to private and other choices. A little bit about TAG. Again, I mentioned we've been around since '96, been working with Exim the entire time. Been broker of the year 5 times. That's matched with just one other broker. We're mainly Midwest focused. The other broker is a West Coast broker that is also a 5-time winner. Along with that comes working with the local environment. So I'm actually with the Wisconsin District Export Council. I'm the current treasurer on the executive team. Again, what that means is just kind of like what you're doing here, where it's a group of executives that are trying to help companies with best practice. And we just created a trade finance and risk team. So we're trying to get word out about that in 2024. So again, we're just going to talk methods of payment, but specifically talk and focus on open account, credit insurance, self-insurance, when do you graduate, and the role of a broker like myself. What do we do? And then we'll have questions. If you have any Exim questions that come up as well, I can handle those. A great tool for you to use is the new trade finance guide. For those of you who are just getting started, I put the link here. It's been revamped. It's what I used when I helped start an international division. So it's been around for a long time, but it's continually updated. And it's, as Mark said, a sale is a gift until you get paid. When I was starting a new division for a company, a new international division, that's exactly what the owner said to me. Bruce, it's a gift till we get paid, so you better learn how to get paid. And that's how I got into this field. So we've always, in this market, we've talked a lot about obviously cash in advance, documentary collections, and letters of credit. Not as much about open account, whether it's insured or uninsured. So that's where we're going to focus and try to do more and more in 2024 going forward in this space for best practice purposes. So, why not cash in advance? I put why not CIA. I just thought that was play on words. It was late when I created this. Mainly sales tool. For those of you who are looking to sell more, again, you can get cash in advance, and you're probably going to limit how many sales you can get unless you have something incredibly unique where there isn't a competitor, and with no competitors, you can demand whatever and dictate whatever terms. But if you want to sell more and grow, then this is a very, very good sales tool for you, trade credit insurance. And we'll talk more about that. There is a longer transit time, especially going by boat, especially these days. If they're now going around the Horn and avoiding the Suez because of the chaos there, there is a much longer transit time, and that needs to be financed either by your buyer or yourself. So in that case, with longer transit times, you're going to potentially finance that and protect yourself. And we'll talk more about how that works and why that works. Big part of the trend for international, and this has been going on for a long time, but when you have really good products and services, and the US does, because it's so competitive just to sell within state to state, let alone anywhere else in the world. So we really have to hone our skills. So ECAs have been created, export credit agencies all over the world. So there's an Exim Bank, there's more than 80 of them around the world. So like South Korea has an ECA that's helping companies export and provide terms and do it on a very a good basis for those companies, because all of these countries want to increase their exports. So there's 80 of them. Canada has something called EDC. We have Exim Bank. China, typical China, they actually have 3 of them. So as you're out there, and anyone in new business development, owners, management, leadership, just knowing that it's easier to extend terms when you have tools like Exim Bank, and then graduating from Exim Bank to private sector. And a lot of it does get down to what's your planned relationship, and usually you're looking for partners. What Mariel didn't say is you can get your protracted default or claim. You can place it in 90 days, but they also allow you to go as long as 240 days because they know that that's a relationship. You don't even have to file a claim if you don't want to. But the point is, Exim wants you to keep that relationship, because once you put them in there to collect, that relationship is done. You're not going to get it back because they're pretty rough in how they collect. And then lastly, when you start offering terms, you need a credit management strategy and policy, kind of the 80-20 rule. Allows you to be much more efficient. We talk about efficiencies and time, and everyone's days are full. So your credit policy is going to take care of the 80%. And then the 20% you can do from a management or ownership level and say, okay, do we want to do this unique situation? Let's talk about it, and here's why. But last thing you want to do is look at each order from every country individually. You just you'll flounder. So when you do this, credit management policy strategy is one thing to do. And you already have a start. You have a trade finance guide, and you have a country limitation schedule that Mariel was talking about. So if the country you're trying to sell to is closed by Exim, and Exim is trying to get you to sell everywhere in the world, leave that for last, because that's going to be an incredibly difficult sale. Your trusted sources, again, we're talking, DATCAP and WDC are at the top of the list. Local, you know them, they're phenomenal. The trade finance banker, if you can find one, you probably have to be with a bigger bank to have access to someone like that. If you're with a smaller bank, you're not going to have access to someone like that. There are very few less. I was one of those and came into 2016 into trade credit insurance. Commercial services, that's why we started the TF&R team. So it's trade finance. We want you to have access to trade finance professionals that aren't selling you something. They're going to tell you what best practices are. Exim Bank, there's an office in Chicago, which is nice, so you're not having to go out to the coasts. And Ursula does travel a lot, but you can see she can pull in one of her colleagues, and her colleague is very well versed in Exim Bank, which is great. And then ourselves, we're a fiduciary. So when you work with a specialty broker, just like with your business insurance, if you work with a broker, their fiduciary is working for you. Just a reminder, methods of payment and where we're going with the insured, uninsured. So this is why asking one of your colleagues does help, but not 100%, because you're actually assessing the risk based on what you're willing to take as a leader in your company. So other companies are going to have different levels of comfort with the risk they're willing to take. We understand that. So when we're talking about methods of payment, credit insurance, we say, what are you comfortable with? How well do you know your customers? What's typical in the market? You can get that information from EDC and others. What's the competition offering? Nature of the order is a little bit more, capital equipment versus what we're talking about today. And what's the political situation in the buyer's country, which seems like these days can change overnight. Self-insurance is no credit insurance. You're just going out there and selling like you probably sell in the US. You get a credit report and you sell. So when you're doing that, these are some of the assumptions being made. So hopefully you have this in place, just by going from cash in advance to open account and not using these tools. Yeah, you save some money, but you're going to spend a heck of a lot more time. You got to either buy the expertise or build it internally. Got to know what best practices are. Got to understand how you're going to finance this open account, because domestic AR is an asset. International AR is not. Oops. And then your bad debt reserve is going to have to go up if you do it this way. Trade credit insurance really protects you, especially slow pay and insolvency. We talk about insolvencies, those are growing. But really where we see the biggest use is in slow pay. And for those who aren't insured, we'll send you a check. Usually you get it when you need the next order. But here, as Mariel said, when it's 60 days past due, you got to send a note into Exim saying, hey, it's past due 60 days. Doesn't mean you have to file a claim, but you can actually use that, work with your broker and send a letter saying, hey, I got to report you guys as past due. The buyers do not want to be on that list because they start having capital restricted, global capital, the markets, they all talk. Usually it's a key account policy or whole turnover. Exim is pretty much whole turnover, unless you're doing that single buyer. Key accounts is how, when you're graduating from Exim, you're like, you know what, I'm very comfortable with, say, Canada, or I'm very comfortable with like Europe. I'm just going to open up Latin America. And so maybe you'll just do a policy for Latin America in the private sector. As a reminder, again, trade credit insurance, secondary source of payment, shifts the risk, been used for 100 years in Europe and more recently in the US. But remember, Europe pre-EU, you were selling country to country, just like we sell state to state. So the Europeans created the policy parameters, and then we took it over here as we in the US started selling more, especially to Canada, Mexico, and beyond. It does, and why it does, why use it? Safe sales expansion. You now can build some internal credit and collection expertise, and you also have some on your side, giving you advice. It increases your borrowing capacity. So for those of you who are trying to get international to be self-financing, this an insured receivable is now an asset, and it's part of your assets that your bank will review and lend against. And then some minor issues with tax. What is covered? Mariel talked about this. Again, protracted default and insolvency are big ones. Currency devaluation that just happened, obviously in Argentina. Diversion of voyage. I mean, it's weird. You look at these like, oh, that's not going to happen, and then 2 years later or something, all of a sudden something happens. But it doesn't cover dispute. Dispute, if you want to cover or be careful with dispute, obviously cash in advance helps. Same thing with a letter of credit. With dispute, for credit insurance and open account, you need the same thing, whether it's insured or not. You need to build into your policy procedure that the product has been received and is in good standing. It's all you have. And once you get that email, then they can't 3 months later say, oh, it was bad. So it's just a best practice, but you need it even if it's not insured, because if it's not insured, you're going to go to court yourself and you're going to need that document. So it's just a best practice when you're selling outside of letter of credit terms. These are all of the private, most of the private, say they're active in this space. Obviously, Exim Bank, most important place to start, but then all of these others. So we recommend not going and taking the call from, say, Allianz. Say, okay, yeah, we'll use yours, because now you just lost all the competition and you're going to get a higher rate and maybe not as good a coverage. And so that's why you use a broker. Same reason you use a broker for your business insurance. Provide you all of these things, no cost to you. The insurers pay. So it's basically a bunch of free advice and gives you, even if you had to pay, they would get you a better rate. But actually, they're going to get you a better rate and you don't have to pay. Whoop. And then a little bit about us. I know I went fast. We have the slides. I'm readily available. And you can certainly get, contact me through here, through Mark, through, DebtCap, Lisa, however you choose. We're happy to answer a question on best practice, and this is how things work. So any questions?
Yes. So how are you compensated again? Can you go over that?
Yeah, so the brokers are compensated by the insurer. So for example, when I'm working with a company who's using Exim Bank pays me. When they graduate from Exim Bank, we've had that a lot actually over the years. And let's say they go from Exim Bank to FCIA, then FCIA will pay me. It doesn't, and actually it doesn't increase your rate. They don't sneak it in that way. Because with a broker, if they try to increase your rate, then we'll move you to a Tradius or Allianz or Aminta. So they're fine. It reduces the salespeople they have to pay. And actually many insurers don't even have salespeople. They just use brokers. So we get paid by the insurer and we work for you.
Thank you.
Any other questions? Bruce, thanks so much. That was really comprehensive and great to have your contact information here on the screen so people can take a screenshot of that or write it down. That's wonderful. Anyone else?
Bruce, you talked about trends that you talked about increases in slow payments and insolvencies. Any trends by region or by country for either of those?
No, it's amazing. It's an eclectic mix of everywhere from Canada, Europe, Asia. There's no rhyme or reason, big company, small company. It's, the pandemic really kind of washed through the world, and those who didn't manage their balance sheets as well as they probably should have, those are the ones that are having some issues. And they're everywhere in the world. But we're 3-5-fold in as far as claims and slow pay, pre-pandemic to now. The interest rates just, what Warren Buffett says, and I won't, when the tide goes out, those who are swimming naked are seen. So the tide's out.
Wow. All right. Well, next up on our program, we have Jen Pinot-Gallagher with M3 Insurance, and she's going to highlight some things due to risk. And so I'm looking forward to hearing what Jen has to say. And I really appreciate Marielle's presentation today and Bruce's. It's really valuable information. It's complex. And so we're really glad to have these resources available to us to explain it and to walk us through the process. So we'll get Jen's PowerPoint up here and we'll turn it over to Jen.
Thank you so much. And I just have to give a kudos to the Wisconsin Department of Ag and everyone on this council. Exporting is such an important part of our industry, and the fact that you make the time to regularly come together and share best practices is only going to be a benefit to our entire industry. As Secretary Romansky mentioned, I'm no stranger to the Department of Ag. I actually worked at the Wisconsin Department of Agriculture for over a decade, had the pleasure of working with Lisa and Jennifer Liu directly, and Secretary Romansky. It's been an honor to be able to serve the agricultural community through my role at DATCAP. And now today, I continue working with food and agribusinesses through my role at M3 Insurance. Just a quick 30-second overview. M3 Insurance, like Trade Acceptance Group, is an independent broker. So we are a full service broker that works with commercial lines, so property casualty insurance, as well as employee benefits and 401k. And because we are independent, like Bruce at Trade Acceptance Group, who is able to work with a multitude of carriers, we can do the same with our lines that we work with your companies on. Bruce, if you, let's see, if you'll stop sharing your screen, then I'll just throw up a really short couple of slides here. And my approach is going to be a little bit different. So the previous speakers really focused on ensuring your financial risk and making sure that you can de-risk the risk of non-payment. I'm going to transition a little bit and take a 30,000 foot look on two of the more important areas of risk. I shouldn't say more important, but two important areas of risk, one being the risk to your people when you're getting involved in exporting, and the risk to your products. The last thing any of us want is to have a situation where we have a team member going overseas and there's an incident. I vividly remember being at the Wisconsin Department of Ag leading the trade team. And I think, Lisa, in fact, you had a trip coming up. You had either just returned from Japan or were heading to Japan when the Fukushima situation arose, and we had all of Japan shut down. I can't remember the exact timing of that.
Yeah, exactly. And you don't want to head to a country where they're in a disaster mode. So, yeah.
That's exactly it. And so let me share my screen here. And let me, bear with me a second. I'm not the most adept at technology. So can you tell me, are you seeing the cover slide here, Lisa?
Yes, we're seeing the screen. Yep.
Okay, excellent. So as the title says, the basics. I'm just going to touch at a very high level on some of the basic needs that we see from exporters at all levels, whether they're a brand new exporter entering into their first market, or whether they're a seasoned exporter and they're sending products all around the world. What I'm not going to touch on are some of the insurance and risk management needs for a company that would be considered global in nature, in the perspective that they have plants overseas, that they have production plants overseas, and they have employees based overseas all year long. That would involve a global master program, which I won't touch on that today. I'm going to talk about the basics. One of the most basic tools for mitigating your risk is internal communication. I can't tell you how often we might get a phone call from an agricultural company that says, you know what, we have a sales team and we're finding out after the fact what countries they're going to and what they're doing in country. And we're getting a little nervous that what if something happens while they're overseas and we don't know where they're at? So really the baseline for mitigating your risk is have good internal communication. Oftentimes this shouldn't be an issue if you have a smaller organization where everyone sits close to each other and you know who's out of the office traveling internationally, and you know pretty much when they're coming back. But when you get to a larger organization, and I know we have a few on the line here who there might be silos. The domestic sales team might be completely siloed from the international team, and that international team may not be actively sharing what their upcoming travel plans are or where they're going. And so it's really important that you're sharing that information not only within your sales team, but you're making sure that your financial leaders and your leaders in human resources are aware of what your travel plans, and I'll explain why in just a moment. The next area of risk that you want to think about is the risk to your products. You're obviously sending not only people out into this global world, but you're sending your products overseas as well. So what are some of the very basic tools that you might want to put in place to protect your products when they're going overseas? So let's start with the people. I think everyone will agree that our most valuable asset in our organization are our people. And as an employer, you have a responsibility to make sure that you are providing a safe work environment for your people, and you are putting plans in place to respond should there be an issue when your individual team members are traveling overseas. What are some of those issues? Lisa and I just mentioned that at the beginning of my presentation. Had Lisa been in Japan when that incident had happened, it would have been a very challenging experience. The idea is that when you are sending your people abroad, you want to anticipate what are the risks to my team members. There's a risk of an accident, national disaster, medical emergency, political unrest. You want to think about, by knowing in advance where they're going, how you would respond. Should a worst case scenario happen, you want to think about what are the tools that you have to help your individuals when they're traveling overseas. First and foremost, you would want to think about your foreign workers' compensation insurance. Typically, domestic workers' compensation insurance is not going to provide coverage if your individual team member is in Germany and it's January and they slip on some ice and hurt themselves. You want to think about making sure that you have your foreign workers' compensation insurance coverage in place. One benefit of that as well is that unlike the domestic workers' compensation insurance, foreign work comp will actually cover endemic disease. So if you are traveling to tropical climates, dengue fever, typhoid, there's a whole plethora of potential illnesses that can be contracted. That could be covered. That would be covered under your foreign workers' comp versus your domestic. You'd also want to think about marrying that up with travel accident insurance, kidnap and ransom coverage. These insurance coverages are not only valuable if something were to happen, they're valuable in advance, because with many of these insurance coverages, you can get risk reports sent directly to you and your team. You can get travel advisories. If worst case scenario happens and you're in market and you need to know what is the very best hospital to go to for this particular situation, you would have that information available to you through this insurance policy. So it will help facilitate not only your help you through a situation when you're overseas, it can actually help facilitate you getting to the best possible medical care while your travelers are in country. Transitioning to the products, think about some of the product risks that you might face when you're sending food products, commodities, agricultural products overseas. There's liability, there's loss of product in transit, there's recall. We see the recall notices every single day coming into our inboxes for various food products. If you are exporting products, have you talked about how you would respond to a global recall? Some of the risk transfer tools that are the most commonly put in place is the International Liability Program. Don't assume that if you have liability coverage that you will have coverage should your product enter foreign markets. Oftentimes, the coverage limitations for a domestic product are the United States of America, Puerto Rico, sometimes Canada. So as soon as you make your plans to export your products internationally, you need to be checking with your broker to make sure that you have coverage once that product is in international markets. Think about protecting your products while they're in transit. Ocean marine coverage is one of the more robust. The advantage, if you were to purchase this product as a standalone product versus having your freight forwarder add it to the shipment, is that you can get a year's worth of coverage. You can get door-to-door coverage. So you can actually have coverage on your product when it's leaving your facility and traveling domestically, as well as all the way to the foreign market. You can also have coverage added where, let's say there's some diversion because of a hurricane, or you have a product that has to go into a warehouse for a short period of time. You could have what's called unnamed location coverage added. So if you have some deviation in your route, you can be sure that that product is covered even if it's in a warehouse that you hadn't planned on using beforehand. And then lastly is the concept of the global product recall. Recalls are very sticky, they're complicated. The advantage of having recall coverage on your products is that you have experts, third-party experts that are hired by the insurance carrier to help facilitate those recalls. So as I mentioned at the outset of my presentation, I was going to keep this very high level, very basic. My main message I want to get back to you is communication. Talk internally, make sure that your leadership team who's making the decisions regarding your insurance coverage is aware of where you're traveling and when. Ask questions about whether you have the right coverages for yourself when you're traveling overseas. Ask whether you have the right coverages for your products when you're traveling overseas. And that will go a very long way in minimizing worst case scenarios when you or your products are overseas.
Great points to cover, Jen. And actually, we just had a recent incident, well, it was in May of 2023. A group of us were including, I was traveling with Dairy Farmers of Wisconsin. We were in Bangkok and we had a medical emergency. So, you know, it was one of those things, it was quick thinking. It was, what do we do? Thank heaven we had US Embassy personnel with us, and we were escorted, the person was escorted to, you know, the recommended hospital, right up to the floor to be taken care of, and provided with medication and treatment, and then did a follow-up when she returned home. I mean, because you never know when these things pop up or when it happens, and you have to be really mindful and be prepared with at least some process to follow when you're in those situations. But yeah, it can happen at any time. So these are great points to bring up when we're all traveling internationally, as this group on the council are doing. Are there any comments or questions to bring forth with the group?
I have a question for Jen. That's okay.
Yes.
Jen, when should you consider your own marine policy versus using a forwarder? Like, what, shipping once a month, or like how
You know,
frequent?
if you're an incidental shipper, you know, once every quarter, and smaller values really is, it's up to you to decide what you consider a small value. Because a small value for one company may be a really big shipment for another one. So that really is something that the individual company would have to decide. If you're an incidental exporter, once, twice a year, it's probably easiest just to go through the freight forwarder. Once you get to the point where you are consistently sending shipments, you can do a cost value analysis. How much is it costing you to buy through the freight forwarder on individual shipments versus how much would a full year policy cost? And that is math that can be done very easily by your insurance broker. It's a very quick turnaround to get a quote for an ocean marine policy. It doesn't take very much time. And there's just so much more flexibility that's allowed with that year-long policy. And it's something that you would have then an agent on your side helping to manage a claim should a claim happen. Very good question.
Great.
Hey, Lisa, before we end, I'm looking at the list of folks that are attending today. It's great to see the interest. I would suggest, and I would really hope that everybody on the call, if there are topics on the export side that you're interested in, that you'd like to hear more about, let us know, and we'll try and find experts. It'll be hard to find experts like we had today, because today was amazing, but we'll try and find the best experts we can to get on calls like this to continue to up our export knowledge and game and capabilities.
Great point, Chad. Yes, we're always interested in hearing what people want to learn more about. So please shoot an email to Randy or Mark or anyone here on the call. So that would be great. So
Great. And if I could add to that, and thanks for bringing that up, Chad. You know, I see that Ellie Berg with Small Business Administration is on with us, and the SBA has similar programs to what we talked about with XM, somewhat a little bit different. And as well, USDA has the GSM program at the World Dairy Expo. In fact, on the exporter seminar that Jennifer organized, actually the young man from USDA presented on that. So if this topic is of interest, and I think it might be to the group, then we can certainly have another meeting similar to this and have those folks be able to talk about those products as well, to give the full spectrum of what's available both in the public as well as the private sector for these kinds of programs. Because I think it is important, as we were saying, you know, it ain't a sale till it's been paid, and you like to be able to cover it. So I think these are beneficial programs that a lot of folks don't see as sales and marketing opportunities and tools, but actually they are.
Great.
Well, Lisa, why don't I'll bring up the PowerPoint from our side, and we can just go quickly through the trade promotion activities that are we're still in active recruitment, and talk a little bit about the International Market Access Grant. So let me make sure I have the right screen sharing.
Yeah, there's a full slate of activities going on that our staff is organizing. And we still have some room in activities that Mark will be sharing.
So is this sharing now?
Yep. You could advance the slide.
That's what we've just talked about here. So let me
Yep.
get into the right screen and move it.
So coming up in May, Secretary Romansky will lead a trade mission to Santiago, Chile, and we still have room for several companies to join us. So it's a multi-ag activity. Jennifer Liu is organizing participation at the Carrefour Wood Show in France. And Shirley Acedo is looking for companies to join her at the Alimentec show in Bogota, Colombia in June. And the China Dairy Expo, it will be held in Wuhan this year, and usually they don't set their date until further along in the spring. But you can see a full slate of the activities that the International Agribusiness Center staff is organizing on the website below.
Great. And then Lisa, the International Market Access Grant. So we have partnered with the Wisconsin Economic Development Corporation to provide some funding into that longstanding program. In years past, their application period was open pretty much from August all the way through until the end of March or April 1st. This year, they had switched that up a little bit, and so they had up to October had an intake for applications, and then to be able to process some of those, do the underwriting, and that will open back up again in February and go from February until the end of March. So a short window of opportunity for those companies who either A, have finished their or their International Market Access Grant Program projects. And once you've completed that, you've turned in all your receipts and documents and you've gotten reimbursed, you can reapply into this year. Or for someone who hasn't applied yet this year, it's still available, and your project would be able to run then until December of this year. And then the documentation would need to be to WEDC for your reimbursements and all things closed out by, as I remember, the end of January for that program. So just as a reminder, that's $10,000 per company to be able to enter or expand in foreign markets. Is a broad range of activities that it covers. And then for those who have graduated from the Export Tech program, you're eligible for up to $25,000 in reimbursement of activities. There's a 30% cost match, and the timing on that is it does take 4 to 6 weeks, closer to 6 weeks actually, for the underwriting for that to be able to spend in your project. But for folks who have plans right now and opportunities, best is to reach out to us, any one of the team in the International Agribusiness Center, to talk about what that project might be and to get you launched in that. But just as a reminder that application period opens up here pretty soon at the start of February. So we want to make sure that everyone makes full use of those funds to help you grow your business overseas.
Are there any company size requirements with that grant?
Good question to ask. Actually, for agricultural products, and these are the dairy, meat, and crop products that are covered under the Wisconsin Initiative for Agricultural Exports. So that's all the things that we're working with, all the folks that are on the call right now. Then there is not a size requirement. It's a revenue requirement for companies. If you're a manufactured products company, that's different. That's in their program guidelines. But as a agricultural products company, those that we work with, then it can be a company of any size.
Okay, good to know. Thank you very much to our wonderful speakers today, Marielle, Bruce, and Jen, on this very important topic. And we'll have, I'm not sure when our next webinar will be scheduled for, but we do have a full council meeting on March 6th in person here at DACCAP. And I'd just like to say I've been with the state of Wisconsin for 26 years. It's been my pleasure.
You've been an excellent partner to work with, Lisa, and you've done so much good for the state and for the exporters in the country, in the state here. And we really do appreciate working with you, and good luck in your new role working with our next door neighbors there in Minnesota.
Yeah, I just can't stay home, so I have to be occupied. Thank you all very, very much.
Very good.
Lisa,
Thanks very
we're going to
much.
miss you.
Thank you.
I'll miss you too.
All right. And
So.
with that, I will stop the recording.